The asset growth, fortunately, occurred organically and over a long period of time. So we were able to handle it. We actually made remarkably few changes in what we were doing. Instead of being nanocap focused, by which I mean having an average market cap of under 100 million, we now have a microcap focus with an average market cap of 300 to 400 million. That's really not meaningfully different. The portfolio was always concentrated. There were always long-term holdings. And we were always active. So we certainly have made evolutionary changes. We used to go over 10% more often. We don't do that with new investments anymore. There were other changes that we've made of a more technical nature, but fundamentally, the business has not changed that much. If I had to pick one single evolutionary change that's been made over the last 5 years, it is that we are far more willing to exit positions and to trade around core positions than we used to be. Because when you have a 10% holding of a $300 million stock and the market falls by 50 or 60%, it's not a pleasant experience. And so instead of holding positions for a modeled outcome, now, unless we truly have inside information relative to the rest of the street, when a holding migrates up to fair value as opposed to full value, we're going to lighten up and look for other opportunities and not be exposed to the sharp kind of volatility that we've all experienced since 2008.
The move up in market cap hasn't been a major change, because the reason for the market cap that we're looking at to be so small is that the companies be underfollowed. And so while commissions have gone away for sales and trading, where you might have had back then 5 or 6 analysts following a 100 million market cap company, today you could be a $2 billion company and not have any research coverage, not generate enough investment banking business to be followed. So we find that even though our companies may have a little bit larger average market cap, they're just as underfollowed and thrown away as the 100 million market caps were 16 years ago.
And that really is what defines our space. It is the sheer amount, and then secondarily the quality of analysis that others do about them. Because while our typical company today may have 2 or 3 analysts who follow it, to use the word analysis might be a bit of a misnomer to describe what most of them do.
They're following the companies because they follow the industry, because they follow the companies in the industry that are much, much larger. So they regurgitate the press releases.